Hello everyone, my name is Matthew Frailey. I founded Breakpoint Trades back in 2003. Since then, we've been providing advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like you see here with our 21 mean reversion systems and of course our famous KISS trend following systems. You got to check them out, guys. They have been kicking ass, taking names. The KISS system, again, I've went over this many times, but it's a proprietary trend following system. It has its signals to take entries, and then it sets a smart trailing stop, raises it up over time. And the beauty of it is it's a non-curve fit system. It's profitable on almost anything. So when you go to the system section, go to KISS STS tables, you'll be brought to this section. You see there's various tabs here. We have a basket of stocks, as you can see. All the Nasdaq 100 stocks, all the S&P 500 stocks, over 100 ETFs. I think there's 130 ETFs here. All the Dow Jones 30 stocks, and you can set favorites. You could also see what other people are looking at under popular. Okay, there's over 630 instruments here, and so you can see here on the BPT basket. Take a look at these awesome gains. Again, these are from the system. The system enters. The website sends you an email notification whenever it enters, whenever the new smart trailing stop, whenever it exits. I mean, look at these gains. Awesome gains here. UPRO up about 29.5%. Bido up 41.6%. Some of these crypto stocks, Mara 181%. Coin 113%. AMD 29%. I mean, just crazy gains here. Again, number of STS in a trend, that's the number of times that the system raised its stop. So for example, for Coinbase, it's raised its stop 17 times. For Mara, it's raised its stop 14 times. You can click on the actual symbol, see an actual live chart. So here's Mara. It went long right here on November 22nd. You can see all the smart trailing stops. Current stop is 24.60. It's getting a bit long in the tooth, but that's how the system works. If you're a subscriber, you can set favorites by clicking on the star button, and then you can go to the favorites tab and you select to send you an email notification. Again, amazing stuff. There's nothing out there like it. No one else has this. You should subscribe to Breakpoint Trades to receive the signals. Okay, let's go ahead and get started. This is the video. It's been about a week since I did a actual YouTube video. It is Wednesday, December 27th, 2023. This is our back-end recorder for our website, which I'm going to go ahead and get started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, December 27th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. As you know, Steve's been doing the newsletters the last several days. Last newsletter I did was last Wednesday. Steve was out of town for a week, as you know, in Mexico. Again, happy holidays, everyone. Hope you all had a good Christmas or, whatever you celebrate. We're in that holiday time of the year. The market's had one hell of a rally since the late October lows. We had that breath thrust signal, which has played out fantastically. Market had a massive rally in November. It's having an awesome December. Nice Santa Claus rally. Also, most of the pros have closed their books and they're not doing much trading. Why? Because they don't want to risk their bonuses. So a lot of pros have closed their books. Market's lighter volume. A lot of people are on vacation. Market's been drifting higher. That said, so I'm not going to overanalyze things, guys. The trend is up. The trend is strong. That said, we are looking for some mean reversion pullback sometime soon, maybe early next year, early January. We also think that pullback will be bought. So it's not, a major short, but it'll help the market reset a bit. Market really needs a catalyst to pull back. That could be anything. It could be something in the Middle East. I know that I saw something in Israel's fighting a front war on 7 fronts now, and you have all this problems with Iran or these countries firing missiles at merchant ships, etc. So maybe, if that were to get worse, maybe that could be a catalyst in the market, or who knows. But again, not going to overanalyze things. As far as the long ideas, we've had some amazing setups here. I only added a few new ones tonight, guys. I'm not going to add a ton of longs here with the market a bit at nosebleed territory, but I did add a few, and I hope you've been participating in the longs. I've also hoped that you've been participating in the KISS systems. They've absolutely nailed this rally from the late October lows, catching massive gains in the index ETFs and most tech stocks, Dow stocks, you name it, ETFs, whatever. Next, item number 2 shows the economic or the index sector table, what transpired today and this week. So you can see for the S&P, or you can see for the major indexes, a slight up day today, again around 0.2 to 0.3%. For the week, the indexes are up anywhere from 0.6% to 0.7%, with the Russell leading up 1.66%. Moving on to the market sectors, we have 21 sectors here we follow. Out of the 21 sectors, only 4 were down. And again, mostly very small moves. The energy area was weak today, followed by transports. Everything else was up, but small gains here. Again, you can see most of the gains, in fact, all the gains on the sectors were less than 1%. And you can see the moves for the week. Currency-wise, U.S. dollar continues to melt down another 0.5% today, 0.75% for the week. Cryptocurrencies have been up nicely, but really what has been up the most have been the crypto stocks. Go look at Mara. Go look at Hive. Go look at Wolf. Some of these stocks are up a couple 100% in literally a month. Crazy moves there. Commodities today were mostly weak, as you can see. The index, DBC, was down about 0.5%, still up 0.5% for the week. Crude oil down almost 2% today, but it's still up for the week. Natural gas up, copper up 1.5%, corn and wheat down, coffee up, sugar up. Precious metals continue to be up, gold, silver, GDX. So that area continues to be very good. And as far as the bond market, and we just continue to see the 10-year Treasury yield fall, and when the 20-year rally. Remember, I called for a major intermediate top in the 10-year Treasury yield a couple months ago, and that has played out very well, and that is another thing that has been pushing this market higher. Next, item number 3 shows the economic news calendar. As you can see, not much on the docket this week, is there? Tomorrow, Thursday, initial jobless claims, retail inventories, wholesale inventories, pending home sales, natural gas inventories, and crude inventories. And then we have the PMI on Friday. Okay, guys, let's go and jump to these index charts first. So the first chart below, item number 4, is the daily snapshot of the 5 key major indexes. Again, guys, like I said, nothing new here. So you can see in late October, indexes were below those lower Bollinger Bands, extremely stretched, bearish sentiment. Then we had the bullish time of year coming in, and boy, look at that rally we've had since. I mean, look at the Dow. Just hardly any little one-day pullbacks is all you've had. Never even closed below the 9 EMA. Again, very strong moves. Small caps have really came back. Remember, they lagged all year. Again, we just continue to meander up. Remember, topping is a process. It's much different than bottoming. Bottoming, market can just go down, bottom, and then V up. Topping is different. It takes a while, and it usually exhausts you, if you're trying to look for a short. So it's best to play the trend. Next, moving on to the KISS system. So here's the KISS system for the S&P daily. You can see the smart trailing stop. It says DVT, and still need this. I need to change that. That's from one of my old charts, but you can see it's at 46.13. We do have another version that has a STS up here higher that Steve showed on the weekend. I think it's a bit tight. I thought I put that in here tonight, but I did not. But anyway, just realize that if you want you could have a very tight stop, which is around this low of this big candle, or you can use this wider version at 46.13. System went long back here. It's done a damn good job. Next, Chart 6, here's the 4 time frames. Again, nothing new to say here, guys. Like I said, back in late October, we had the very wide moving average ribbon. We had a DeMark 9, support cycle, everything lined up there. Some A's here recently. That's some amateur buying. Again, that's light volume. So sometimes that can produce a market pullback, but we are in that time of year when volume is light. Half day chart, we lost the ATR. We're right up against it, so this is short-term resistance. We'll see if we can pop over it or not tomorrow. We have a little DeMark 9 on the 130 minute, and we have an end of bull cycle on the 78 minute. So we'll see if that caps price or we just bust through it. Next, chart 7, here's a daily view of the S&P. Like I said, in late October, we were very oversold. We were in demand zone. Nice rally out of that. Broke out of the channel. There was an open gap back here, which we filled. That was a magnet. Like I said, really the next target is, the early 2022 lows. We're just a stone throw away, likely to hit. We do have a little RSI divergence here, but we're close enough to that highs. I think at this point, we'd be best to at least tag that before we have some sort of pullback. Again, we're almost at the end of the year now. Chart 8, here's another daily view of the S&P, just zoomed in a little bit. Again, Steve talked about this chart. Like I said, this was previous resistance around this 4,600, and we busted through that clearly. Now, what I'd be looking for is when the market finally does have a correction, one area where it may pull back to is all the way to this previous breakpoint resistance, which is now support. If we pull back into that area sometime in January, I think that'll be a buying opportunity. Okay. So let me show you what I'm talking about. So sometime in January, again, if we had like a 3-wave pullback to this area, I think that's a buy opportunity. Remember, in uptrends, 3-wave pullback, ABCs are your friend. Next. Image number 9, here's the half-day chart. Again, nothing much to say here. Like I said, we do have a little RSI divergence up here now. We had a little bit of divergence here at the 47.78 high on the RSI, and you can see it produced like a quick 1-day pullback. By the way, that was options expiration. Then we've rallied up. We made a marginal new high again, and you can see I didn't draw it in here, but there's now another divergence forming here. So there is a divergence at the moment. Be aware of that. Next, image number 10. Here's the 60-minute chart. Again, nothing new. Again, we just continue to uptrend. One thing, note, the MACD is lagging here. So even on another little pop, we are going to have a MACD divergence. Chart 11. Here's a 30-minute chart. Again, we had a little wedge back here, as you know. This was drawn in, but we had a little wedge that I was showing last week, which played out for a quick, hard pullback. Again, that was on an options expiration. That's why it was so violent. And we've recovered, had a little coil here, broke out of that. And here you got a little horizontal rectangle. We'll see if it can pop out of here into the end of the year. Again, the all-time highs are very close, not very far away. Finally, chart 12, here's a 10-minute chart. You can see this consolidation pattern. Again, if this were to break up to the upside tomorrow, it should go right away. Next, moving on to the Nasdaq. Here's the triple Q's KISS system. Again, no new smart trailing stops. It's still up around 395. System went long, basically just a couple days off the lows there. Very awesome entry. And you can see all the smart trailing stops since. You could also see during that consolidation from late October or late November into early December, moving average ribbon pinched. That was a great area for a second buy condition. Chart 14, here's the 4 time frames. Again, very similar to the S&P. You have the A's on the daily up here, amateur buying. You also have the end of bull cycle on the 78-minute and a DeMark 9 on 130. Next, chart 15, here's the Q's daily. Again, what can I say? All we managed to have was a little bitty pullback from late November into early December, bounced off that 20-day moving average there. You could see how the 5 and 9 EMAs pinched right into that 20, then moving average ribbon pinched, rallied up. Again, small candles lately, so momentum is waning. We have a little RSI divergence here to be aware of, okay? Keep an eye on that. Chart number 16, here's the Triple Q's half-day chart. Again, shows you the exact same thing. Again, we have this divergence here we're monitoring. Finally, chart number 17, here's a 30-minute chart. Again, you can see the little rising wedge there that produced that pullback last week on options expiration. We now have a little horizontal rectangle. We'll see if we can pop out of that tomorrow. Next, chart number 18, small caps. Again, they've literally had a straight up move since that low in late October. That inverse head and shoulder pattern played out beautifully. And chart number 19, here's a 60-minute chart. Again, continued uptrend. There is a little wedge forming here, so keep an eye on that. And that does it for the market, guys. So we'll see what happens tomorrow. Again, happy holidays, everyone. Let's move on. Taking a look at some of these indicators, chart number 20, here's the VIX. So the VIX last week had that quick little pop out of the Bollinger Bands. Then it closed back inside the Bollinger Bands on Monday. And that was the VIX Bollinger Band buy signal. Occurred right here. And it has produced a little market rally up since then. Next, chart number 21, here's a 2-hour view. Remember, I've been showing this chart for a while, this channel. We popped out last week on that options expiration. We're pulling all the way back now, but this broken trend line channel is now support. So this is an area to watch where the VIX could come down and bounce off of it. It's something to watch. So keep an eye on that. Finally, chart number 22, here's a 15-minute chart of the VIX. Again, so far, nice through wave pullback. There is a demand zone here, so we'll see if it finds some support in here or not. Chart number 23, here's the SVXY. That's the inverse VIX ETF versus the S&P. And again, you can see the two moving lockstep together. Chart number 24, high yield corporate moving to bonds. Again, high yield corporate continues to march higher. Remember, the market is highly correlated to HYG. So wherever this goes, the market does, and there's no change in trend here. Chart number 25, here's a 60-minute chart. You do have a potential wedge-like pattern, some divergence. This wedge isn't very steep, though, so sometimes I see these break to the upside instead. Chart number 26, here's the 10-year Treasury yield. Man, this has had one hell of a sell-off from that October high. Remember, I called a major top there. Based on my monthly chart where we had the 5 waves down. So that has been one fundamental reason for this powerful market rally. Didn't even really bounce at the 61.8 fib here. Just down, down, down. But keep an eye on it because eventually this is getting oversold short term. One trigger to watch would be a break over this RSI trend lines. Those tend to be good triggers. Chart number 27, here's a 2-hour view. Just following the steep downtrend channel. Now, the one thing I wanted to point out here, we do have a MACD divergence here. So, again, divergence on its own is not a signal. You need some sort of trigger, but it is there at the moment. A bounce rally attempt in the 10-year will likely correspond with a pullback in the market finally. Chart number 28, here's the TLT 20-year bonds. Again, it's its inverse to the 10-year, just moving straight up while the 10-year has been moving straight down. Really nice trade from this parabolic trend line break. Remember, I drew this parabolic curve back in October, and once we broke this, it's been off to the races. Next, chart number 29. This chart shows you some of the major sectors. Again, I'm not going to look at all the sectors tonight. Steve did that on the weekend. Again, nothing's changed, guys. Again, almost all the sectors are up today except a couple like transports and energy. Chart number 30, here's XLE Energy. You can see a little pullback. Again, XLE bounced nicely off that demand zone a couple weeks ago. Little pullback here today. Really no changes in the trend. Next, moving on to commodities. Chart number 31, DBC, down about 0.5% today. Again, it rallied off that demand zone a couple weeks ago. Right now, I drew a little horizontal rectangle type pattern to monitor. Chart number 32, crude oil. Pulled back today, basically an inside day of yesterday's candle. Nice rally off that demand zone from 2 weeks ago. You could also count 5 waves down, as you can see, just like you could have counted 5 waves to the upside at that September highs. Okay. Here I added symmetry. So this rally is about 8.5 points off the lows. The previous largest rally attempt was back here about 835. It's a slight symmetry break. So that gives you some odds of this forming a higher low on the next pullback. Chart 33, natural gas. Again, so far just chopping around here since that low was put a couple weeks ago in December. Chart 34, copper. Again, just meandering here. Up. Remember, the major support was back here, which was where it rallied off of in October. That was really an excellent area to go long, and that's the ETF. Chart 35, DBA. Remember, this has been coiling. We've been showing it. It's still in the coil pattern. Again, it's a slow mover. It's not a beta mover. It's not like those big cap stocks, but you know, this can be a trade once it breaks out of the coil. Chart 36, wheat. Steve showed this on the weekend. Coil setting up here. One to watch. It was down today, but it's still in a nice coil. And chart 37, WEAT. That's the ETF. That's the way to play it if it breaks out. Next. Chart 38, Bitcoin. You know, where we've seen the big moves lately is in the stocks. But Bitcoin here right now, it's forming into a really nice tight coil pattern. So energy is building. Chart 39, BITO. That's one of the Bitcoin ETFs. Again, you can see this has the same coil. So if Bitcoin's going to break out, that's one way to play it. I'll keep an eye on that one. I added it to the long list. Looking at some of the crypto stocks, I mean, the moves in these have been massive. Here's Mara. We had it as a long idea back here in this coil in November. And man, that coil looks compressed now because the price has had such a move. We had this, the trigger on this coil was around $10.50. It's now 31. So this trade, if you still were in it, is up 200% from that entry. Amazing. So again, it is getting extremely overbought here. If you're in it, trail those stops up. It is getting parabolic here. Parabolic moves are unsustainable, so make sure to protect those profits. Chart 41, Hive. This has had a heck of a move too out of this pattern. Another crypto stock. Another long idea of ours. I mean, look at these moves. Look at the volume. Chart 42, Wolf. Another one that we had. We had it as a bull diamond a couple weeks ago, and today it really powered up almost 30% on today's move. Again, it triggered over a week ago here, so hopefully you guys still kept it. Moving on to the currencies, here's the US dollar, which was down today about 0.5%. There's a big demand zone down here to monitor. Again, if the dollar starts to bounce, that may finally put some pressure on the precious metals and even maybe the market. So keep an eye on that, be aware of it. Chart 44, FXY, that's the Japanese yen. Remember, I put this out as a long idea several weeks back. Had a double bottom here, and it's moved up nicely. This is one I've simply been holding long. Moving to precious metals, chart 45, gold up about 1.1% today. Still around the 61 fib. Again, nice rally from that October lows. Remember, I pointed out this three-wave pullback, ABC. Steve has it labeled as WXY, whatever. Three-wave, and it was a nice entry. Higher lows since, and it's been a really good move. Gold, as you know, had that overshoot spike about a month ago up to 2150. That needed to be worked off. Next, chart 46, silver. Again, just meandering up, still in the bigger pattern. Remember, on the monthly chart, there's a huge coil, and when it eventually breaks out of that, I think it's going to be a major long-term swing. Again, I don't have that chart in here tonight. I'll show it next time. Chart 47, here's GDX. Again, just meandering up. Remember, we have a series of higher lows here. We had a kind of an inverse head and shoulder pattern back here where we liked it. Another higher low. It is getting a little, energy's waning a little bit, or momentum is. So this is either going to break out over this little resistance here, or we're going to get a little pullback soon. Especially if the dollar finally puts in a little oversold rally, that may cause that. But it's otherwise still uptrending. Chart 48, here's the BPGDM, Gold Miners Index. Remember, this is a bullish percent chart. If you don't know what those are, Google them. They're based on point and figure charts. When it was down here, it was very oversold. And but right now it's in the 50s, 50 percentile. Remember, these can go from 0 to 100%. Rarely do they get to those extremes. But one thing to note here, for the last month almost, it's been flat. So the BPGDM and the 8 moving average here, which I have as a trigger, they're both the same price. This is eventually going to break out of it. It's going to either resolve in a quick pullback or going to resolve up. But it's been building here, going sideways. Chart 49, RGLD, it's a gold stock I showed a week ago. Still looks okay in this overall basing pattern. Finally, guys, let's follow up with our trade ideas. We've had some amazing trade ideas here. So that's mainly what I'm going to go over is ideas over the last few weeks. So here's Irene, Iris Energy. I had this as a long idea over a week ago. It had a tight bull pennant here, and look at this freaking move since. I hope some of you guys caught this. One hell of a percentage move. Chart 51, Massey. This is another one I had as a long idea back in early November. My price target at the time was $100, which was more than achieved. I said just trail the stops up a little below the 9 EMA. If you've been doing that, notice you'd have been stopped out today. You had a little dip below this. So you likely would have been stopped out today, but that's been one hell of a percentage gain from this 86.50 trigger. Chart 52, HIMS. It's been on the list for about a week. Finally breaking up through here a little bit. Again, where would a logical stop for a swing go? Right around this higher low at this point. Chart 53, Nerd Wallet. It's been on the list since November. Was a tight coil, and it's been a very nice percentage move since. Just continues to ratchet up. You know, just march higher, holding that 9 EMA. Chart 54, ARM. Really nice move from this bottoming pattern. We've had this on the list. Again, guys, you know, if you're not doing our trade ideas, you're really missing out. Again, I know the focus is on the KISS systems, but you really should venture out and do some of these subjective trade ideas because the vast majority of these work out. You don't need to play them all, but, you know, pick a few of them. But, you know, just one or two of these would pay for your membership for a year or many years. So you really should consider trying the ideas. Chart 55, checkpoint. Now here's an interesting example, guys. So this is a long idea of mine back in November, inverse head and shoulder pattern. It played out beautifully. My target was the supply zone. It hit it, and if you didn't take profits there, boom. In fact, it would have been a great short there. But just a great example, that inverse head and shoulder pattern, more than playing out, and price pulling hard back from the supply zone. So just perfect textbook action on technical analysis. Chart 56, Unity, another nice long idea we had from back in November, just continues to march higher. Chart 57, Google, was a coil I put out last week. Moved up a little bit from the coil, pulling back now. Again, the big support's the 9 EMA and the trend line. You know, if you wanted to give it a wide stop, your stop needs to be just below this trend line at this point. Chart 58, Peloton. This one hasn't triggered. I put it on the list last week. This is a clear important area. It was support back in May and August, became resistance in September and December 2 times. So if it breaks it this time, I think it goes up nicely. So I bought a little bit. I put a stop basically at yesterday's lows. Pretty tight. Chart 59, GPS, one Steve put out last night. Notice the 9 and 20 are squeezing. So this could have another quick pop if it holds this area. Chart 60, W day, workday, another one where the 9 and 20 are pinching here. We'll see if we can get another quick pop out of it or not. Chart 61, FSR, Fisker. This is one I've been stalking. It had a hell of a sell-off. Big volume here, so to me that's capitulatory volume, meaning, you know, the longs finally capitulated. Here you got a tight coil, and what I'm showing here, it's either bottom now and it's gonna rally, like I show, or this could get a quick pullback and then bounce. Okay, that pullback would set up a MACD divergence here. So Either way, this is still on my list. Jabber 62, here's the 2-hour view. Again, shows you the converging trend lines. It's getting really tight here. Jabber 63, HE, this has been on the list. It never triggered. It's this basing pattern, so it's still valid. Jabber 64, SPXU, that's the ultra inverse ETF for the S&P. Again, since the market is in nosebleed territory, just keep an eye on this as a hedge. I haven't bought it yet, but I'm watching it. You do have some RSI divergence setting up here, but again, no trigger, no reversal yet. Jabber 65, here's the 2-hour view. Here I had a little trend line that could be a trigger if it breaks over that. You notice the divergence setting up. Jabber 66, here's Home Depot. One of our astute members put this out. It's kind of a high and tight flag. We'll see if we can get another quick pop out of that or not. Jabber 67, lows, same deal. Kind of has a flag. Into the 9 EMA, low volume on this pullback. We'll see if we can get another quick pop out of it. Jabber 68, AMPX. So here's a new one I added. Inverse head and shoulder pattern. Great volume the last couple days. So this is one I like. I'll be looking tomorrow, see if I can get an entry. And that'll do it. All right, guys, that'll do it. Again, appreciate all your support here. And looking forward to 2024. Going to be launching the high performance KISS system sometime in January. Breakpoint Trades is more of a family. We don't have a big marketing. We don't have a marketing team, so a lot of our subscribers come from word of mouth. So appreciate that. Telling family and friends, stuff like that. Again, thank you for all your support. Happy holidays. Take care.